Hello students, welcome to this explanation on employee benefits, and this question is called Sundry. It's quite a good question and it relates to calculating a provision for leave pay. All right, it reads as follows. You are the audit clerk on a Sundry audit, and Sundry has a host of outstanding accounting issues that need to be addressed before the audit can be finalized on 31st December 2010. Your audit manager has asked you to do the following. So there they give you a note A, issue with regards to provision for leave pay. In this question, they have two types of employees. They have employees who earn salaries and employees who earn wages. Of course, salaries are generally considered a monthly payment, while wages are normally based on working hours. So for the salaried staff, they say there are 30 salaried employees, and they are entitled to annual leave of 20 days. On average, the average leave that is not taken is 5 days per employee for a year, and then leave carried forward can be used at any time or be paid out in cash when the employee chooses to leave the company, so when the person resigns. The average gross salary of an employee is 180,000 Rand a year. And the total cost to company is 200,000 Rand a year. All right, so there might be a question, why is it different? So how does gross salary differ from cost to company? Well, your gross salary is typically the amount that you would see if you open a payslip, right? Or typically on a payroll, it's based on how much you've earned. Cost to company is slightly different. You will see in this instance it's a bit more because it can include things that the company plans for but does not necessarily pay out to you. So you can think about things such as sick leave. So the company needs to prepare to be able to pay you a number of days sick leave should you become ill. However, it will not show on your gross salary payment because you're not necessarily ill, right? So it also includes the cost to company, also includes amounts that are not necessarily realized but should be planned for. Then it is expected that 10% of employees will resign and that the leave will be paid out in cash next year due to resignations. So you're either carrying your days or they are paid out in cash. Something that's very important is that if the days are carried forward and the employee did not resign, then it is based on cost to company. But if the employee resigns, it's based on the gross salary. And that's something important to remember. Right, then we can move on and look at the wage earners or the wage employees. And they say they have 400 wage earners and they can get 20 days of annual leave. The average leave not taken at the end of the year is 6 days. However, they are only allowed to carry forward 4 days. So on average, there are 6 days left, but the rule says we can only carry forward 4. So one must read these questions very carefully. They tend to put maximums and limitations on them. And if these limitations are not taken into your calculation, then your calculation, unfortunately, would not be correct. So the maximum days that they can carry forward is 4, and you would have found that it was 5 for the salaried workers. So we cannot use the 6 because even though on average there are 6 days left, 6 days of their leave left. So let's say they have 20 days. If 6 days were left, they were only able to be on leave for 2 weeks. But the company limits it, only 4 days may be saved up. The leave that has been taken has to be taken in 2011 or it will fall away. So if the leave is not taken, those 2 extra days above 4, if they're not taken, they are lost. And then they say no leave is paid out in cash. So if you have 6 days remaining and only 4 days can be paid up, they will not pay you for the 2 days. You will lose those 2 days. Then average gross salary is 100,000 Rand a year, and then the cost to the company is 120,000 Rand a year. Of course, because nobody resigned in this question, they tell you in the next bullet there were no resignations, so therefore we will not use the cost to company, or we will not use the gross wage, we will only use the cost to company to calculate our final totals. Then they say assume that there's 260 working days in the year and that no employee has had leave due to them from the beginning of the year. In the required part, they ask you to calculate the provision for leave pay for both the salaried staff as well as those who earn wages. All right, so let's see how this calculation will be approached. And I'm going to start with those who earn salaries, right? So what I want to know is I need to calculate, first and foremost, what is the rate per day? So what is the rate per day that these people are paid? And now there are two possible rates that we can calculate. There is a rate based on the gross salary, and there is a rate that is based on our cost to company. And in this instance, we will calculate both because there are employees who are resigning, and therefore we need to use a different rate. In terms of the rate per day, we're going to say for gross salary, if I look at the amount given in the question, the gross salary was 180,000 Rand a year, and they tell me in one of the final lines that there's 260 working days. So that gives us 692.31. I'm just going to round it to 2 decimals because in the required part it was the instruction to do so. They say calculate for December, show all your workings and calculate to 2 decimal places. Then for the cost to company, the total cost to company was 200,000 Rand for salaried staff per annum, and per working day, it's 769.23 cents. So again, I'm just going to round it to 2 decimals. So now we have a rate per day, and now we can go and calculate our leave pay provision. So the leave pay provision is always based, if they ask the leave pay provision, as they've done here, it is always based on days that were not taken. So provision for leave pay means how much would we have to pay them next year because of this leave that was not taken, or how much money do we have to save up so that they can take extra leave next year. So it's based on days that were not taken in the current year, and that's why they call it provision, because we are planning, we are providing for the following year. So if I look at the salaried staff, it seems to me like there are 30 of them in total. However, they say 10% of these people will leave, right? So we have a total of 30 employees, and then we have those who will resign. Let's rather use the word resign and not confuse it with leave and leave pay and what have you. So for the resignation, there are 10% of them that will resign. So it means the remaining who will continue to work for this business would be 90% of those salaried staff members. So if I look at 30 members at 10%, it should be 3, and then those who remain should be 27, so that we can add up to total employees of 30. Right, now in calculating our leave pay, we're going to say that we need to do a calculation based on those who are resigning and those who are remaining. So for those who are resigning, I believe it is 3 people in total, and we're going to multiply that by the 5 days, which is the average leave not taken. And then we are going to multiply it by the rate based on the gross salary, which is 692.31 cents. So in an instance where staff members are resigning, we use the gross salary rate. If they are remaining, we use cost to company rate. If we look at those who remain, those are 27 employees, and we have 5 days for them, and their rate is 769.31 69.23. So if I do those calculations, 3 people times by the 5 days times by the rate per day for the gross salary, and I do the 27 times the 5 days times the rate of cost to company, and I see if this is correct. 27 times 5 times T4, 3 times, yes. I will just retype to make sure that it is correct. It is so easy to make a mistake. You cannot be too careful. Times 5 days. And it seems that it is the exact same amount. So now we just have to add those two together. First, I'm rounding them. Oh no, it's 10% of the amount, of course, because it's 10% who will resign. So there's sum of, and there is our total to 2 decimal for the leave pay as it relates to those who are salaried staff. Right, let's look at the wage earners. I'm just going to say wage staff. And again, there we need to go and calculate a rate. However, they tell us that there are no wage staff who resigned. So because of that, we will not need to calculate the gross salary. We will only need to calculate the cost to company per day. So for the cost to company rate, it is going to be the amount that they earn per year. So the cost to company is 120,000 Rand a year, and there's 260 days in a year, and I need to round that to 2 decimals. Right. Now that I have a rate, I can go and see what are the days that are being carried forward. And if I look at my question, it's that we are only allowed to carry forward 4 days, because even though they have 6 days, the maximum for next year that can be carried forward is 4 days. So I'm going to say then my leave pay for these staff would be the 400 of them, which is the number of employees, times by the 4 days, and we're going to have to times it by the rate 461.54. Times 400 times 4. And there we have our leave pay as it relates to the waged staff members. Right, so there was a number of little tricks in this question. So first of all, you should have realized that if there is a resignation, the rate that we use to calculate the leave pay is based on the gross salary. Should the employees remain, we are going to base it on cost to company. Then we should have been wary of the 10%, 90% split. Right, thereafter with the wage staff, we had to remember that we have to limit it to 4 days. So even if they have 6 days unused, the policy says only 4 days can be carried forward for next year, for providing for next year, which is the provision for leave pay that we've created. In some instances, they might ask you what would be the total provision for leave pay, and it would then be the sum of the salaried staff and the wage staff added together. So the total provision would be then these two added up. In total. Right, so that was the explanation of the leave pay calculation for Sundry, an introductory type of question so that we can just first understand basic principles. I think it's important to avoid running once we have not even crawled. So I think this is a very good example of what is basically expected of you to understand in terms of a leave pay provision. Right, I hope that you have enjoyed this video, and I will then see you in our next one.